What's up, guys? Welcome to the weekly technicals live session for October 7th, 2018. And before I go ahead and start going over the technicals, just if you guys can just confirm that you can hear and also see my screen. You should be looking at the upcoming news releases or the economic calendar on forexfactory.com. So just leave a 1 or a yes in the chat box. That way I know that you can see and also hear me, because I switched up my computer setup a little bit over the weekend. So just want to make sure that all that works. But basically, just to kind of give you guys an overview of how this session will go, pretty much just like every other weekly technical session, we'll start off with the upcoming news releases. So I know sometimes I forget to do this, but I like to start with the upcoming news releases. This is a method that ICT used to use as well, or still does use, and it's just a good framework to kind of see what days or potential times would line up as, ideal trading opportunities. So going ahead and jumping right into it. Thanks, guys, for letting me know that everything's working. But looking at the economic calendar, you can see that Monday we've got Canadian bank holiday, USD bank holiday, and then today we've got a bank holiday for the Japanese yen. So going forward into the remainder of the week, Wednesday again is looking like an optimal day, pretty much like we did last week. Wednesday we were able to secure about 50 or more pips depending on where you ended up taking profit. But for me personally, it was about 50 pips on the trade that we took on Wednesday for euro dollar. But looking this week, again, potential trade ideas or setups: Tuesday, Wednesday, Thursday. As you can see, for all three of them, we have relatively decent amounts of news releases for the currency pairs. So we've got British pound and Canadian dollar New York session on Tuesday, and we've got a late FOMC speaker for dollar index. So we may see the majors start to move a bit during Asia session on Tuesday. And Wednesday, we've got GBP London session. So this will be more than likely an ideal setup for GBPUSD. And then we've got core PPI and PPI for dollar index New York session. And then again on Thursday, we've got some GBP news during London, a little bit of Euro late London, and then some more dollar index news for 5:30 a.m. So the start of New York session on Thursday. So in my personal opinion, Wednesday and Thursday, London and New York session. So those are looking like the best days/times to trade this week. But again, you guys do know that I focus Tuesday, Wednesday, Thursday. So if I see something Tuesday, I'll take it. But from an economic calendar perspective, Wednesday and Thursday look to be the most ideal in terms of volatility and session times. So that's basically what I'll be looking for. So during Wednesday, Thursday, London and New York session for both, I'll be focused on GBPUSD and EURUSD as usual. And we could see a bit more movement in GBPUSD this week. So we'll talk about that when we get to the charts. But overall, I think this week will be much better than last week. Even though we did do pretty well last week and secured about 50 or so pips. Personally, this week we don't have FOMC or NFP, so weeks like this I tend to excel better, simply because of the fact that we don't have as much uncertainty in the markets like you do get with FOMC or NFP. So all right, going into the technicals portion of this video now, we're going to start off with dollar index here on a daily basis. So as you guys know, the weekly technicals, we keep our perspective out on a weekly as well as a daily basis. And then during the daily technicals for you guys in the premium group inside the Facebook group, what we do is we do the daily technicals where we do an intraday perspective. So you can look at it on an hourly basis as well as a 4-hour and see what specific levels we're looking for to enter and exit at and why those levels. So the weekly technicals, I keep it a little bit more broad just because I'm doing an analysis for the next basically 5 to 6 days. So with that being said, if I'm using an hourly perspective, those levels are going to get achieved or hit really quickly, right? So keeping it on a daily and weekly basis for these weekly technicals videos is really good because it gives you guys the longer term and the higher time frame perspective than those of you in the premium group. You'll see, in the daily technicals videos, you'll really start to dial yourself in with the levels based on what we've talked about in the weekly technicals video. So not everybody will get access to that. If you're not in the premium group, you won't have access to the daily technicals. If you do want access to that, then you can just be a part of the premium group and you'll get access to it all. So just to kind of go ahead and talk about dollar index here now. Overall, if you look at this pair, we are relatively in a consolidation longer term, so on a daily basis, right? So we're trapped between 92.30 down here, or 93.20. My numbers are all messed up this morning. 93.20 for these equal lows, as well as 97 big figure for the liquidity above this high. So in terms of a range, or where are we? We're between this low and this high, right? So we're consolidating between. We're staying in that range. So when you break down the price action that's occurring within the range, you can see that the market traded down here, cleared out some liquidity, didn't clear the liquidity here at 93.80. So it left this in place. Then the market came down and it formed a higher low point, pushed up, broke above this daily down candle, which was an ICT bullish order block, retested it, and then it ran for the liquidity above here at 95.80. Okay. So now that we've taken the liquidity above 95.80, what I want to see this week is both scenarios. Bullish, if we're going to continue higher, this pair should start trading for 97 big figure. Okay, so we may come back down and retest this order block here at 95 big figure, but if they're going to continue higher, they should start moving relatively quickly and soon. So early on in the week, they should start heading towards 97 big figure. So Monday, Tuesday, even Wednesday, we should see them pushing or expanding up for 97 big figure if they are going to take the liquidity above 97 big figure. Okay. Now, the bearish scenario that I'm seeing for this potentially is if this is in fact a long-term high at 97 big figure, if this is a long-term high, we've came down, made a lower low here, lower than this low, came back up, found some resistance, sold off again, made a lower low in respect to this low here. Came back up, we've cleared out the liquidity above this high, and then we sold off and made another lower low. So the fact that we've come all the way back up and now we've cleared out the liquidity above this high, I'm basically looking at this as potentially a turtle soup scenario. So if it's going to go lower, then this move above this high was just a fake out, and it was to trap retail traders thinking it's broken out of resistance, retest support, buy it. So that's what they're thinking. Now, if they're going to take this lower, this high that formed at this 96.20-ish level, 96.12, they should hold that and trade lower. So whenever they get down to 95 big figure, they shouldn't find support here. They should just continue expanding through it with big bearish candles, ultimately heading for the liquidity below 93.20 and here at 93.80. Okay, so that's basically what I'm looking at for the bearish and bullish idea. Now, personally, I'm more likely to be on the bullish side of this now, rather than the bearish. So I know for a while now we've been targeting 93.20 and I've been looking for this, and I still would like to see them clear out these lows. It's just with the price action we've seen up here, such big bullish candles expanding, typically this will be, this could be a more significant low than I was expecting. Meaning that this could be an intermediate term to a longer term low. So meaning a low that stays in the market for a longer period of time rather than just a couple days, couple weeks. It could be in the market for a month or longer, something like that. Pretty much how this high was. So it formed in August, and we're all the way in October, and this high has still been in. So if you shorted it here or sold it up here, for 2 months, you basically were able to see profit on the downside. So if they are going to push it up, I think they're going to start reaching for 97 big figure quickly. I don't think they're going to waste a lot of time to getting up there. So I'm more inclined to believe that they're going to push this thing higher first before trading back lower for 93.20. Now that's just my personal opinion. I know last week I was more bearish dollar index, but again, looking at the price action, it's looking like we're going to see some strength in dollar index. So that should mean we should see continued weakness in foreign currency. So with that being said, let's go ahead and jump into the foreign currency pairs. First one that we'll start with is euro dollar, and again, this is a daily perspective. So this pair here is almost exactly inverse of what dollar index has been doing. And with me believing or under the impression that dollar index is going to push higher, I'm more likely to believe that this pair will probably want to go a little bit lower. Now looking at this, again, we still have the liquidity built up above 1850, 1840 to 1850 up here. But if dollar index is going to continue pushing higher, we're going to see weakness on this pair. Okay, so this will have to be a target for later on, not right now. So we've made a lower low with a big bearish candle. We've came below all these lows in here at the 1525 level that we were mentioning. Retested it on Thursday, retested it again on Friday. So personally, I think we're going to see, continued weakness in euro dollar here down to about minimum 1450 to potentially all the way down to 1380. All right. Now, up until we get to 1450 or 1380, which is basically the 50% level up to the high of the order block, or a little bit higher than the ICT bullish order block for 1450. If we break through those levels with big bearish candles, we're going to run the liquidity below 13 big figure. Okay, so I don't know, as of right now, I don't know if they're going to go for 13 big figure. Now, if they break 1380 right here, at that point, I'll say, okay, they're more than likely going to run for 13 big figure. Right now, where we're at, it could do both, right? This could turtle soup, so it could sweep these lows here, and then it could start expanding higher. If, like for a bullish idea, it could have ran the liquidity below here, that be all it needs, and then it could start to push higher. I don't think that's the case. I think we'll see continued lower prices, but that is a potential idea, right? Now for the bearish idea, think about what we've done. Broke below the 50% level of this candle here, which was an ICT bullish order block. It's the gray level here. Broke below it. Next candle traded lower. Next day comes back up, retests that level. Bam, sells off. So in my opinion, if they're going to take it lower, they can just use the low right here at 1520 to 1530. And notice how the bodies are staying below this level here. I'm thinking that they won't really have to go much higher for euro dollar, and they can just continue to drop it lower down into our 1450 down to 1380 levels. So that's what I prefer to see in euro dollar. Honestly, I'd like to see continued weakness down to these levels. But if for some reason we do in fact start trading higher and this was a turtle soup, then obviously I'll have to align myself with the markets on Tuesday or Wednesday. And this is typically the main reason I stay out of the markets on Monday, because as you guys see when I do these analysis on Sundays, sometimes I'm pretty clear and confident on what the markets are going to do, and sometimes I'm a little bit torn between both directions. And when I'm torn between both directions like this, I could see bullishness or I could see bearishness. Typically I'm leaning more to one side. And as you can see, like from this video, I'm leaning more to bullish dollar and weaker foreign currency, right? But by having two ideas, so a bullish and a bearish idea, and not trading Monday, that basically allows you to let that price action fill in, so you have some more data or some more price action to look at before actually taking any trades or going in the market, you have a lot more information and more clarity on what the market's going to do. Because watching a full day's trading, Monday, you'll be able to tell or have a better idea which way or which idea is going to end up panning out. Is it going to be the bullish idea or is it going to be the bearish idea? So for bullishness, for this pair to remain bullish, we have to remain above 1380. If we get below 1380, we're just going to continue falling lower. Okay. Now for the bearish idea, for this pair to remain bearish and not continue higher, I want to see them remain below 1590. So 1590 to 16 big figure. They should not go back above that. If they have big bullish candles getting back above there, at that point, I'm going to have to, go back to the charts and really do a deeper analysis and see what's going on, because at that point, we could see potential bullishness and we could run for the 1840 to 1850 highs. Okay, first being this high here and then these highs over here. So basically my invalidation levels. So if you guys aren't setting invalidation levels, all an invalidation level is a level where you know that you're wrong. So I have an invalidation level for bullish ideas and I have an invalidation level for bearish ideas. If either of those levels gets hit, I have to disregard or remove that idea. I can't be attached to it. I can't think, oh, well, let me just move it just a little bit. Let me do this. No. You have to absolutely switch your idea or change it up or whatever. But if you break below your invalidation level, whichever level that is, you have to switch your bias. So if you're bullish and your invalidation level gets hit, you have to become bearish. If you're bearish and your invalidation level becomes hit, you have to be bullish. You can't stick to the idea and say, oh, but I was bearish for so long. Like, notice me this week, right? I've been bearish dollar index for weeks. And then all of a sudden this week we get some price action where it's looking like it wants to go higher. I have to switch my idea. I can't stick to it and say, oh, I want that 93.20 equal lows on dollar index. You know what I mean? And a lot of times traders will get caught up and married to an idea, if they're in a trade with it or whatever. Even if you're in a trade and your invalidation level gets hit, you have to close that trade, accept the fact that you're wrong, and move on to the new trade. It's plain and simple. All right, so that was a quick little side note. Now jumping back to the charts, our invalidation levels for this pair are our bullish invalidation level. So we are wrong on bullishness if 1380 gets traded below. We are wrong on bearishness if 1590 to 16 big figure, so 1.159 and 1.16, if either of those levels get traded into with big bullish candles, so a big bullish candle like this, you don't want to see a small little candle like this, but a more bigger bullish body candle like this. If that happens and it comes back above here, we have to switch our idea. Okay, so I'll keep you guys updated, if those invalidation levels get hit or anything like that. But from where we're at currently, I'm leaning more towards EURUSD continuing lower, and I would like to see them, if they are going to keep selling this thing off, we should get through 1380 with ease. It shouldn't pause or it shouldn't wait around 1380. It should just continue pushing lower. So we shouldn't really see it find much support here. It could find a little bit of support, come back up, hit a resistance level, and then continue selling off, but we shouldn't see it find support and then start trading all the way back up to 16 big figure. If that happens, obviously we have to switch our idea to bullishness, right? So for euro dollar, again, just to simplify things, we're looking for weakness down to 1450 to 1380. Our invalidation levels for bullishness are 1380, and our invalidation level for bearishness is 1590 to 16 big figure. So now let's go over to GBPUSD. All right, so this pair here, look at this 50% level. I think we marked this out last week on the weekly technicals. We took the 50% level of these 4 down candles. You can see that this is the dotted line. The market trades right to that. Look at the expansion, or look at the support found at that level, and look how quick the market starts moving. Smaller bearish candles, big bullish candles. Like this bullish candle here almost takes up 2 days worth of bearish movement. Okay, this candle takes up 1, 2, almost 3 candles of bearish movement, right? So you can see that these big bullish candles are much bigger than the smaller bearish candles. So we're getting some strength in this market. All right. And so if you guys were listening earlier as I was going over the economic calendar, you heard me mention that we could see more strength, or more volatility this week in GBPUSD. And so basically what I mean by that is this pair hasn't traded as low as Eurodollar. Right? So we've been it's been holding pretty tightly in this range, right? Now again, just like how I've seen bullish and bearish scenarios for everything else, it same goes pretty much for this, right? Because we have found support and we're trading higher. But basically my bullish invalidation level, so for me to be wrong on the bullish idea for this pair here, we would have to get back below 29.50. So if we come back below 29.50, I'm wrong on a bullish idea. For bullishness though, if this pair does in fact continue pushing higher, which I'm expecting dollar index to push higher, so that should mean GBPUSD push lower, but we'll get to that in a second when we look at EURGBP. Looking at this pair, you can clearly see it's come down to a daily support level and it's reacted off of that. Well, now we're back within daily resistance. We've got these 2 up candles, which is an ICT bearish order block. So we could very well find resistance here and start selling off, which leads me into my bearish scenario. So the bearish idea for this pair would be the market finds resistance at the 31.30 level. So we'll use 31.25 to 31.30. Just because 31.25 is a tad bit lower, I'm going to use that because, again, I don't want to expect or demand so much from the market when it's so close to the level, right? I don't need those extra 5 pips. I'm cool with saying, whatever. I was wrong by 5 pips. I don't care. But 31.25 to 31.30, we could see some resistance come in this market. And personally, if that does happen, we should see the market start running for 29.50 and ultimately 28 big figure, where we've got relatively equal lows down here. So if we're going to continue higher, we should easily get above 31.30 and we should continue gunning for the high above here at 32.20 and then gun for the high at 33 big figure. So basically my invalidation level for bearishness is going to be above this high, because in terms of weakness, what we could do is we could very well find some resistance in here, even come back up into this level 31.50 whatever, and then start selling off from there. But I'm going to use this high as my invalidation level, which is 32.17, so I'll use 32.15. So if we get above 32.15 in terms of a bearish idea, we're most likely wrong, right? So if we get above 32.15, we're more than likely going for 33 big figure, where we've left daily equal highs, and then we've also got some liquidity built up above 33.60 or 33.50, built up above this old high here. Okay, so if we do continue up, that's where we're going. No question about that. Okay, so all I'm waiting for to see early on in the week is, are we going to find weakness here and start selling off, or are we just going to start expanding through that and start trading above here? So invalidation level for bullishness is 29.50. Invalidation level for bearishness is 32.15. All right. So personally, again, I would like to see continued weakness. I'd like to see us find resistance here and start selling off for 28 big figure down here. But at the current moment, I don't have enough information to go off of that because we haven't started showing weakness yet. We're showing strength off of this level, and we've traded back up here. So first things first, I need to see some sort of a breakdown before I'm more inclined to think they're running for 28 big figure. So overall, still I would like to see weaker prices, but if we do trade higher, this is where we're going. We're going for 33 big figure. So I hope you guys can kind of see too, right? Like, I don't always know what the market is going to do. To be honest, more times I don't know what the market's going to do. I just let it prove to me what I think it's going to do. I formulate ideas, right? So I formulate ideas about what I think the market's going to do, and I watch and I see, at those times of the news releases and the session times, I watch and I see what happens or what happened. What did they do? And then that basically tells me a story of what they were trying to do or where they're going, and it gives me more information, right? So then from there, I'm able to take that and use it when I'm looking for a trade, or if I'm managing a trade or whatever that may be. But I don't want you guys to ever think like, oh, I always know what the market's going to do, because I don't. I really don't. What I do is I simply just mark out my levels each week, each day, and as those levels get traded to, I have ideas around them, right? So I had an idea that the market could react bullish off of here. It did. You know what I mean? So like that's all I'm doing. I'm just formulating ideas, and once those levels get hit, I'm dropping down to the lower time frames, and then I'm confirming that idea that it is holding. And then if that's the case, then I'll take the trade, and then that's when you guys get the signal. But I just want you to understand that if you don't know where the market's going, or you're finding it hard to like predict which way the market's going to go next and all that, don't think that it's going to just come easy, right? And you're going to know every week, because even now, like, I don't know every week, right? All you can do is just put in the work, meaning mark up your levels each week and each day on the charts, study the markets, study your patterns, study the things that you're looking for, study the ICT order blocks, study the market structure breaks, study the turtle soups, study the 50% levels on the ICT bullish and bearish order blocks, study the equal highs, study the equal lows, study all those things, and then each week as you're putting these levels on your charts, you'll be formulating ideas about what you think, right? I've seen equal highs and equal lows left in the market hundreds of times. So I know that there's typically liquidity below or above there. So that's where they're more than likely going to go, right? But it takes you guys to see it on your own and to trust it and all that stuff. So if you are looking at the markets and you feel like, oh man, I just don't know what they're going to do, just remember, like, I don't always know either, right? The only way that you're going to actually get to a point to where you can, I don't want to say like know where the markets are going to go, but be able to trade and be profitable consistently. The only way that you'll be able to do that is by putting in the actual work, which is these things, right? A lot of people like will mark up their charts or whatever and not look at them for the rest of the week. But you have to mark up your charts each day, each week, depending on the type of trader you are, so you can really dial yourself in with the markets. And then as your levels are getting traded to or through, you're going to have like so much things that are jumping off the chart and screaming at you like, here, okay, this could be bullishness. You could look for a buy here, and you could target the low on this level. Like all these things, like you'll have all this stuff jumping out on you at the charts, and you'll be kind of like, picking and choosing, right? Like what you want to act on and what you don't want to act on, because you'll know what to trust and what not to trust. So I don't know. I just like wanted to say that real quick because I know like a lot of people are like, how do you always know like where the market's gonna go each week, or how do you know like like I don't know. I really don't. I have no idea, right? All I do is I just mark up my charts, and then I know from experience like what they're likely to do based on these things I see in the charts, and then whatever they do, I just react to it. Right? So if they do something I like, then I'll trade it. If they do something I don't like, I'll not trade it. Right? Or if they do something I don't like while I'm in a trade, I'll close the trade. I'm never attached. You can't be attached. And if you are someone who's attached to your trades, I'm going to be really real with you real quick. You're more than likely over leveraging your account. And that's the truth. So if you're using proper risk management, you'll never have any question or doubt or worry or be afraid or anything like that. Maybe a little bit, but I can guarantee you if you're putting a standard lot on a $100 account, you're going to be a lot more afraid and a lot more scared than you are if you're putting 0.01 on that account. So again, just kind of where I was going with this like little rant is make sure that you're putting in the time and you're putting in the work like for the levels in the charts to identify them on your own, so you can start to formulate your ideas and you can actually trade certain pairs on your own. So you guys know that every weekly technicals I go over pretty much all the majors. I go over dollar index, euro dollar, GBPUSD, euro GBP, dollar yen, AUD USD, NZD USD, dollar CAD. Right? And I make it available to everyone, premium group and free members on YouTube. And I do that so everyone has the same advantage, and they can all act on these things if they choose to. And then you guys in the premium group get way more inside looks at what I'm thinking, why I'm thinking it, all that stuff. But if you're not sorry, I kind of lost my train of thought there, guys. Basically, just to sum it up, if you're not marking up the levels on your charts, especially with me that I'm telling you the specific levels, you have to use them to your advantage. So last thing before I get back to the technical portion of this video is just because I mainly trade Euro USD and GBP USD does not mean that you have to only trade those two pairs. So there's actually a couple people in the group, they've branched out and they've started trading their own pairs. AUD USD, USD CAD, NZD USD, right? They're trading their own pairs and they're seeing it work, right? But it works better for them because they may be in a time zone, or they may have work at certain times, that I'm in the group, or I'm talking about Euro or GBP, and they prefer trading during Asia session, or they prefer trading during New York session, right? So that's why I go over all these pairs each week, so kind of a very general idea of what I'm looking for, both directions, bullish and bearish for every pair. And then once you get that idea, you're able to go and interpret it on your own, and then go in the charts and find reasoning to back up what I've shared with you in the weekly technicals. And one of the members in our group, Ruben, I'm not sure if he's here right now, but he actually was able to secure, I'm just going to the message right now, he was able to secure 56 pips on AUD USD with one entry, and then 111 pips on NZD USD with 3 entries. So between those two trades, he cleared 166 pips with 2 pairs, AUD USD and NZD USD, and with both of those, I didn't call a signal for him or nothing like that. It's simply what he acted on his own, from what he's learned from watching the live sessions, from studying, spending times in the charts, and going out, branching out, finding his own pair and looking for the things that I talk about in his own pairs. So I know there's a few of you that have started doing that, and it's all up to you when you're ready to do that, right? Don't feel like you have to do it right away. Obviously, if you're relatively new, you don't want to do that right away. You want to kind of follow along for a couple months and really listen to what I talk about, why I talk about it. Follow along with where I'm taking the trades, why I'm taking the trades, how I manage the trade, all that stuff. And you'll start learning more, and then you can branch out and start, kind of going on your own there and trying different things. But I do just want to put that out there that you guys, I encourage it. I would like for you guys to start doing that, branching out, trading your own pairs, and share with me in the Facebook group or Telegram. Share your results with me. Share them with the group. There may be other people in the group that are struggling with similar things, and you could be kind of the person that sheds some light on it and that gives them that answer that maybe I didn't answer directly in a video that they understood. You answered it better for them. I'm not sure, but just try it out. I still want this to be a community, right? Like I want everybody to connect and communicate with each other, especially if you're having success. Share it with the group and definitely offer to help them, or you don't have to do that. That's why I'm here, but I just want you guys all to connect and network and be able to communicate with other traders who may be going through similar things or who have went through similar things. So sorry for the little extended, probably 10, 15, 20 minute rant. I don't know how long I just went there, but just to jump back in for the technicals portion, we'll run through all these pairs relatively quickly. We got EURGBP, and this pair, as you can see, we've just been declining. So personally, I think EURGBP is going to be running for the lows down here. We've got a good bit of liquidity built up below the 87 big figure down here, so we can just put a line down here. But 87 big figure will be like the next downside objective I'm going to be looking for this pair, which should cause continued weakness in euro and potential, I'm not saying guaranteed, but potential strength in GBPUSD. So if we do see that bullish idea that we were talking about unfold, and we see this pair just selling off, they can hold Euro USD in a consolidation, let this pair fall, and let GBPUSD push up. So that's kind of like one of the scenarios I'm thinking in terms of bullishness for GBP. But again, I have to wait for a little bit more clarity from the markets before I actually act on something like that. But Euro GBP, nonetheless, we've had a nice little sell-off. So Wednesday, Thursday, Friday, sold off, taking out the low here on the daily basis. Once we were kind of hanging around in this up candle, I kind of figured that we were going to end up taking it lower, but I couldn't really tell whether or not they were going to find support. So if you look, as they're trading into it, it kind of looked to me like they were finding support and they could potentially start trading higher. And obviously, that's why I didn't take any trades after Wednesday. I wanted to just wait and see, what are they doing? Where are they heading? And for Euro GBP, obviously we got way more clarity. This pair sold off nicely, clearing out the daily low here, and personally just looks kind of weak. So we'll see if we keep expanding lower for the 87 big figure, which could lead to some pretty nice setups in Euro USD and GBP USD as well. So again, I don't really have levels or invalidation levels or anything like that for this pair. I just mainly take a look at it quickly each week and kind of see where I think they're going to be heading. And personally, if they're continuing lower, they're going to be looking for this. If they're going to go back higher, they'll come back up into 88s, maybe 89s, but ultimately should find some resistance within this up candle, because now this up candle has become a daily ICT bearish order block. So once we close below it, remember, it becomes a valid order block at that point. So it is now a valid ICT daily bearish order block. So we could trade back up in it, find some resistance, and continue selling off for 87 big figure. So nothing really to watch out for or look at on this pair, other than the fact that if we do continue lower, we could see a nice little pop up. So potential bullishness for GBP USD if this pair continues selling off lower aggressively. All right, so I get this question a lot, so I'll go ahead and answer it one more time in this video, and I'll actually make a note right now on this live session. if in case anyone ever asks me again, I can refer them to this video, because I've talked about it in several videos, but I don't remember where it was. So give me 1 second. Explanation of GBPUSD, EURUSD, and EURGBP correlation. All right, so I'm going to continue back with the technicals in just a second. I just want to address this question while we're on it, because it is just one I get a lot, especially when I talk about these pairs. So when we look at the dollar index, we don't trade the dollar index, anything like that. We just look at it for pure directional analysis. We look at it to see, do we think this pair is going to go up, or do we think this currency is going to go lower? And at that point, we take that information and then we go look at the majors, which are any of the pairs paired with the USD, right? So when you're looking at a currency pair, you're looking at a pair that has two currencies in it, right? A pair is two. So we've got Euro, which is one currency, and then we have USD, which is another currency. So if I look at USD and I think that's going to go higher, and then I look at the currency pair, Euro USD, USD is the second currency in that pair. So if USD is going higher, that means Euro USD should do what? It should go lower, because it's inverse of USD, right? Because Euro is the first currency in the pair. So when we look at EURGBP, it's the same thing. EURGBP is just like the dollar index. It's just a pair that we look at for pure directional analysis. Okay. Now the thing with this pair is it contains two currencies, Euro and British pound. So EURGBP is made up of those two currencies, Euro and GBP. Not the currency pairs, not Euro USD and not GBP USD, just the specific currency, Euro and then GBP. Now when we factor in what we think the pair EURGBP, so this pair EURGBP, when we look at this and say, okay, we think this is going to go lower, okay, what does that mean? That means weakness for the first part of the currency. So Euro, if this pair is trading lower, that means Euro is weak. So that has to mean what? GBP is stronger if Euro is weaker, right? So if this pair is moving down, that represents strength in GBP, weakness in Euro. So then when we factor in our dollar index analysis, and we're bullish or bearish, we have to figure out which one aligns with the setup. So now bringing it all together, we're bullish on dollar, we're bearish on EURGBP. So now think in your head, I'll give you a minute, think in your head, what would be the better opportunity for a sell? Would it be Euro USD or would it be GBP USD? So I'll ask you the question again and answer me in the chat box. I'm curious to see if you guys are going to get this or not. If USD is going to trade higher, so we're bullish dollar index. If USD trades higher and Euro GBP, we're expecting it to trade lower, which pair, Euro USD or GBP USD, would be the better sell with that analysis? Leave your answers in the chat box. I'm curious what you guys got to say. I'll give you about 20 seconds or so to respond, because I know there's a little bit of a lag. And once you respond, I'll see if you got it right, and then we'll move on to the technicals. Let me know, Christian, if that did answer your question, though, because that should have covered it all and made sense to you. Yep, Euro USD. Exactly. Good job, guys. So that's exactly right. So if we're expecting bullish dollar, that in itself means weak foreign currency. Now we go look at Euro GBP and we see, oh wow, it looks like it's going to be heading lower. Bam, that already tells us euro is weaker than GBP. So then we think back, oh, what is dollar index? Oh, well, we're bullish dollar index, so that already means weaker foreign currency. So shit, euro USD might be a good sell. See what I mean? So that is exactly how, whenever I'm trying to figure out which one am I going to trade, which one looks better, this is all I use. Literally, I do not, like, other than the weekly technicals right now, I look at every single pair with you guys because I know there's some of you that don't trade the ones that I trade. So I look at all the majors. Okay, I'm not going to look at no crazy stuff like EURGBP, and now I'll look at those if I'm trading Euro and USD JPY. But if I'm not trading those pairs, I'm not going to look at it. But I'm not going to cover all the exotics like that. But the point is, these exotic pairs, like EURGBP, for example, you're just using them as a directional analysis. That's it. Don't ever try, doing anything else with it. I mean, you can trade them. You could do all that stuff. The same concepts and all that will work. But personally, I just use them as a directional analysis. So it's just factored into my trading. But yeah, what I was saying is, I only look at 4 pairs. Like, outside of the weekly technicals, if you sat behind my desk on a daily basis with me, I'm only looking at 4 pairs. That's Euro USD, GBP USD. Those are the 2 pairs that I'm looking to trade. And then I have dollar index and Euro GBP. Those are the 2 that I look at for correlation or confirmation or congruence or, whatever, like to factor it into my analysis. Those are the 4 pairs I look at total, and I only trade 2 of them, right? So just, that should tell you, a good bit of information about how I do what I do. Cool. Well, I'm glad it helped, Christian. If you guys do have any other questions, please just post those in the chat, but I will get to them after I finish up the technicals because I know we're running a little low on time now. So I do want to wrap this up really quickly. But if you guys do have any more questions, post those in the chat and I'll answer them as soon as I finish with the technicals. All right, so moving back into the technical portion, let's look at dollar yen now. So USD JPY, beautiful, beautiful price delivery. We were looking for the 113.50 level. I'm sorry, 114.50 level, which is this triple top deal thing that we had in here. So we actually marked this out last week in the weekly technicals, I believe. And as you can see, there was a lot of liquidity built up above here. We got one high, came all the way down, formed another high, came all the way down, formed another high, came all the way down. So we came all the way back up and boom, exploded through that liquidity just as we expected last week. I did not trade this, nothing like that. So I'm not trying to say, oh, I was right, nothing like that. But I'm just saying, like, each week, we're talking about specific levels and we're watching them unfold, right? So this is perfect example. We were talking about 114.50. Bam. Where did we go for all last week? 114.50. Okay. Personally, I wasn't trading it because I was bearish dollar index. Now, since I was bearish dollar index, that was causing me to think this pair could trade lower, right? While I was looking at the technical side and all that, in terms of live trading, I did not want to go in this with any live funds because I was bearish dollar index. So honestly, I'm a paper trader more than I'm an actual live trader. So I look at the markets and I mark out levels and frame ideas of where I think it could go and all that, which this was one of them. But I don't trade them. I don't actually execute on them, right? And I only execute on the ones that are clear and match up perfectly with my plan. If they don't, I'm not even worried about it. Right, so although we did hit 115.50 and I could have caught, 100 pips or whatever the total amount was on this, I'm not worried about it. There's plenty of other moves. So the good thing is, and the takeaway from this is, we got our level. We traded right up to 114.50, and look at the reaction once we got there. Boom, right to it. Boom, rejection. You see what I mean? So let's talk about where we think dollar yen is going to go for the remainder of the week now. Again, just like everything else, I got 2 ideas pretty much for this pair. If we're going to continue higher, it's obvious that we're going to run this high at 114.80 to 115 big figure. So in terms of higher prices, that's what I'm looking for. but I don't necessarily think we're going to get that just yet. I think what they're going to do is I think they'll likely take it down here because we've got a daily ICT bullish order block as well as some liquidity resting below here now. So I think they'll take it down to 113 big figure, maybe even like 112.90, something like that, because that's this open price. But once they come down there to 113 big figure, I'd be looking for expansion to the upside for 114.80 to 115 big figure, even 115.20 potentially. But yeah, I don't think we'll get like immediate strength from where we're at now. I think what they'll do is more than likely they'll take out the liquidity below here because this is a daily order block, but as you can see, like it's not really holding. So like it didn't look like it was holding too well on Friday. So I think they'll probably take it lower, hit this ICT daily bullish order block, clear the liquidity below here, and then they'll take it higher from there. So this is my favorite scenario for dollar yen. If it is going to continue lower, so if this pair is in fact, like if we formed a top, if we formed a high here and we're going to start selling off and become bearish, if that's the case, personally, I'd have to see them like really get below this candle here. So this daily ICT bullish order block here that we're looking at it to find support within, if we trade through that with big bearish candles aggressively, at that point, I'll be looking for lower prices. So just to give you kind of an idea, it'll look something like this. You'll see it trade all the way through, and then we can look for a potential retracement to retest that level, which this at that point would be an ICT breaker or old support turn resistance, and pretty much at that point we will be looking for just a retest of that level and then continued lower prices. All right. So I'm just deleting all those arrows really quickly. Now let's move over to Australian dollar. So Australian dollar, could you guys verify that the screen and everything's still working? Because I don't know why every time I do a live session now it pops up and my screen just goes black. So right now I should still be live, but I really don't know if you guys can hear what I'm saying or not because my computer keeps refreshing the page. So let me know if you guys can still hear me right now, because I'm not really sure what's going on, but my computer has been messing up when I'm doing these sessions. Okay, all right, sweet. Thanks, guys. All right, so Australian dollar, basically, whenever we were looking at this the past 2 weeks, I was thinking that this low here at 70 big figure, so 1.71 big figure, I was thinking that this could be a longer term low. And we did see some nice price action off of it. We traded up. We had a break in structure here. We came back down, retested the old resistance level, which was ICT bearish order block. That actually formed the low of the week here. Traded all the way back up into this 50% level of this ICT bearish order block. Started to sell off there. Then here we came back up one last time, cleared out the liquidity, hit the 50% level one more time, and then we sold off. So from last week's price action, obviously it's pretty clear that we've made a new lower low on a daily basis on this pair. So this ICT bullish order block we had mapped out did not hold, so we have to delete that, right? And that's a perfect example right there of me not knowing what the market's going to do, right? So all I do is I mark the levels. So I had the levels marked and I said, okay, if it gets down here, it's going to either continue higher and hold as support as it should, or if it breaks through it, at that point, I'm wrong. And look what happened. It traded through it. I was wrong. No big deal. Once that happened, guess what I was looking for? The low here. And I didn't trade this pair, but I'm just saying, like, this is how you play it, right? You never know whether or not you're going to be right or wrong. and it doesn't matter. It's just about using proper risk management and like focusing on key levels. So, basically the key levels here would have been the daily levels at, which are always the key levels. And as you can see, the 50% level held as nice resistance here. So that's what happened. And now let's talk about what I think is going to happen going forward. I'm going to have to go out to a weekly chart on this because I don't have enough information. Now, looking at this on a weekly basis, it's pretty clear that we're in a very heavy underlying bearish trend for AUD/USD. Okay, so look at all the green candles. Look at all the green candles. Look at all the green candles. Very small green candles. Look at the black candles. Huge, 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 huge. And notice what happens with each black candle. Breaks below each green candle, validating it as what? An ICT bearish order block. Now keep in mind, this is a weekly perspective. So all these up candles, weekly bearish order block. Trades into it, bam, sell off. Weekly bearish order block. Trades into it, bam, sell off. What do we have here now? What was just created here? Another weekly ICT bearish order block, right? So since last week's candle had an aggressive sell-off and we closed below here, what do we got? A new ICT weekly new ICT weekly bearish order block. So what do we look for? Boom. Wait for the retest. Boom. Wait for the continuation lower. Where are they heading? Where do you think they're heading? Right there. If they're going to go lower, that's where they're going. Now, why would they go here? Why would they even want to come here? Or why would I think they're going to go here? Look at the price action. Look at this low and look at the massive move up that we had from the low. 1,000 pips. 1,000 pips from this low, and we never came back to this low yet. Now we're all the way down here. You think it's just going to stop and come all the way back up here, right? No, I mean, I don't think that would happen. So I think all we're going to be looking for is continued weakness to that low. If this market was to break above these two weekly candles, so these two bullish weekly candles, so the level is 73 big figure. If this market was to get back above 73 big figure, at that point, we can look for bullishness. But other than that, the bullish idea for AUD/USD is gone. There is no more bullish idea. It's invalid, right? Because of what happened last week, it's invalid. I don't have a bullish idea anymore, right? My bullish idea was here. Low, higher low. I was looking for these highs. We didn't get that. We found resistance and we sold off. So now guess what? Simple. I just got to move to switch my idea. So guess what? Now I'm bearish. And now all I'm looking for is this low, 68.50. From where we're at now, that price is roughly about 230 pips. So plenty of opportunity within there. You don't have to catch the full 230 pips, but you could find 50 pips, 20 pips, 30 pips, 100 pips. Find all of that in that move. Okay? So if the market gets back above these two bullish weekly candles, look for a retest as support, and then look for continued higher prices from there. But nonetheless, I see it just trading back into the weekly order block and selling off, and we'll see lower prices from there. Potentially, or most likely, down to that 68.50 level. So NZD/USD now. Same thing goes for this. I'm going to have to go out to a weekly. Let me delete these because, again, I had the high marked out. We traded into it, didn't find support. Had the open marked out, traded into it, didn't find support. Had the 50% level, traded into it, didn't find support. Was wrong. Got to take it off. All right, so let's go on to a weekly basis. And as you can see, very, very similar scenario as Australian dollar, which would make sense. These two pairs, they operate just like EURUSD and GBPUSD, right? They're heavily, they're very close in terms of like, I don't know what you would say, but like they're very close pairs, so they behave very similar. And honestly, in my opinion, if you're gonna trade, so if you're gonna look to trade pairs during like Asia session, you could look at like AUD/USD and NZD/USD, and that's actually exactly what Ruben does. One of the members in our group, the one I was talking about earlier, he only trades AUD/USD and NZD/USD, and the reason he does that is because it's easier for him to trade Asia and New York session rather than London session where he's at, right? So these analysis probably are useful to his trading, but like for me, I don't, I'm just providing you guys with the information. I don't really trade these pairs. I used to trade Australian dollar when I was really just getting started trading, but I don't really trade it anymore. I mainly just trade euro and British pound, and that's because I'm on the West Coast and London session is the easiest for me to stay up. There's no specific reason, or I don't think that those pairs are better, nothing like that. I just trade them because in terms of time, it's easier for me to stay up and watch those pairs rather than try to wake up at 4 a.m. every day and try to trade like dollar CAD or something like that. Okay, so for the weekly time frame, as you can see, we're pretty much looking exactly like Australian dollar. All the big, the bearish candles, so the big black candles are the bearish ones, are significantly bigger than the bullish candles, which are the smaller green candles. So last week, again, we've confirmed here, we've got 2 up candles, now validates it as a weekly ICT bearish order block. And in terms of resistance, that's what we'd be looking for as our next resistance level. So the market can trade a bit higher. Obviously, I'm not looking for it to come all the way back above like 67 big figure, but I would be looking for it to trade within these 2 up candles, find some resistance within there, and start to sell off, looking for the 62 big figure down here, which is that weekly liquidity below the market. So just to illustrate what this would look like, all you'd be looking for is, boom, trade back up into that, retest the level, and sell off continuation down to 62 big figure. Okay, so mark out this level here, which is 65 big figure, which is also the low of this ICT or weekly ICT bearish order block, and that could be our level that they end up using. So just go ahead and have that on your charts. And okay, yeah, so that's it for NZD/USD. Again, in terms of bullishness, they would have to get all the way back above 67 big figure for me to start thinking that we're going to take this pair higher. All right, and the last pair, dollar CAD. So this one will be pretty quick. So last week we had the liquidity marked out below here, relatively equal lows between this low here as well as this low. And we had traded all the way back up and cleared out the liquidity here. So this was the rejection that we had on Friday's close of not last week but the previous week. And then on Monday we opened up dollar CAD. We opened up about 50 pips or so lower. So we gapped lower like this. And at that point I was thinking, oh wow, so they're probably going to run the liquidity below 127.50. Dollar CAD looks relatively weak. I mean, it's a pretty nice sized gap in here, all that. Well, then for the remainder of the week, they trade all the way back up, and I thought, okay, they can come and fill the gap, no big deal. But they're continuing to push up. So in terms of where they're going, if dollar index is in fact going to start trading higher for the 97 big figure, I think this pair here will run above 30.80. And get back up into this 31 big figure and potentially even higher above these highs. Now, if dollar index does find some resistance and we start getting it to trade lower, I've got this 50% level marked out, which comes in at 29.70, which is the 50% level of these 3 down candles here. So I'll just show you. All I did is use the body of the candle down to this body of the candle. So let me just make sure that you guys know what I'm talking about. Right here and also here. So you're drawing your fib from the open of this candle down to the close of this candle, and that'll give you the 50% level of 29.71. And again, I just use 29.70 because it's easier. So 29.70 is the 50% level for me. And if this market is in fact going to trade lower, 29.70 should be the level. That would basically be my invalidation level. Let's say it like that. So if they get back above 29.70, I'm pretty much thinking, okay, they're going to take it higher. If the bodies of the candles are respecting this level, so if they wick through it, no problem. But if they're keeping the bodies below 29.70, at that point I'll probably assume that they're more than likely going to take it lower, and they're going to run for this, triple top, or triple bottom, or whatever you want to call this, at 27.50. So that's really it. I don't really have anything else I want to talk about with dollar CAD. I haven't really been liking this pair, honestly. Last week, whenever we gapped down, I thought, okay, this is like finally we'll get to trade dollar CAD. Now I was going to target this low down here at 27.50, but I don't know. I don't really see that happening anymore with the price action we've got. So I was thinking, we could come back up and fill the gap and then start trading lower, but even then, it looks like it's wanting to push back up. So I got to give it Monday anyways. I'm going to give the markets Monday and see what they got to do or what they can show me. And then I'll go back in with a little bit more confidence and stuff. But I'm definitely thinking, I'm more likely to believe that they're going to take dollar index higher, which should cause weakness on foreign currency. And obviously that will cause some strength on this pair because dollar index is the first currency here. So cool. That is it for the weekly technicals, guys. Let me go ahead and stop the recording for YouTube, and I will answer you guys' questions right now.